Hello, trading has closed on the 10th of April, 2024. We'll do our disclaimer, go over our calls, make some predictions. It's my trading plan for Thursday, which is April 11th, 2024. Please remember, I can be wrong. Trade at your own risk. If you want a copy of my system, here's how to order it. At the very least, you should be familiar with the fact that the system gives targets rather than entries. Well, today's call was killed before the open. Gapping sharply in the undesired direction kills the call. As I've said, if the call is wrong, it costs me money. If it's killed, it doesn't cost me anything. We had a move here in an inverted and diamond on stilts. We said that the first challenge is often support resistance. If this holds and it breaks a day or two later, it breaks in grand style. If we move over it, it's support. Here's what we said. The consumer price index came out before the open. So absent gapping down smartly, I look for higher prices. We gapped down smartly, so no plan, no call. During the day in the morning, MEJT gave an ultimate buy signal, but we printed the minimum target immediately and actually got more than that. We got a buy signal and an ultimate buy signal in the afternoon. Both of them hit the minimum target. We don't have to go higher, but as far as the ultimate buy signal, we almost always do. Almost always and always aren't the same thing. And if we go higher before we undercut this low, this is a pattern which tends to lead to a big rally. But at this point, futures are down. There's no guarantee that that low is going to hold. We finally got the break under the FOMC announcement price. If that's maintained, we should trade under that price by more than we traded over it, give or take a little, with a target of 5,084. If you gap up instead, and this holds, you have a big rally, that break doesn't count. We finally got under 50 on the daily RSI, 49.30. If we're up tomorrow, which I'm not predicting one way or the other, we'll be back over 50 again. But for right now, that's a break. But any break needs to be confirmed. Here's our 15-minute chart. We broke into a new low in price, which is not confirmed by secondary indicators like MEJT. Doesn't mean, here's MEJT. That's not really as powerful as I wish it were, but it certainly isn't gung-ho on the downside either. The consumer price index was viewed unfavorably today. It implied interest rates were going to stay high, and of course, bonds compete with stocks or people's funds. If the interest rates are high, they see less risk to take. They see less reason to take a risk in stocks. Now, you would think the producer price index tomorrow will be in line with it, but it's not always. Now, if it is in line with it, the expectation is we'll move down some more, hit those lower targets. But if it's the opposite, this could all be reversed by gapping up. And I'm not going to predict one way or the other because I don't know how well we predict. I don't have a good system for predicting responses to major economic reports. Just be aware that it'll probably be a market mover. So we'll have to use the mixed signals rules. Thursday's pattern has a early high regardless of where we close. It's bullish, we gap down, hit lower low, close over intraday lows. This pattern usually closes near its low and failure to do so should lead to higher prices regardless of where we close. Now tomorrow's open can substitute for today's close, and if we gap and promptly undercut the low of day, that kills the signal. That's entirely possible. This was a break, and futures are down. We gap down under that low, we can keep dropping, but till that happens, that's positive. It's negative. We close under the last FOMC announcement price, and the daily RSI has gone under 50. In addition, I can't come up with a count saying this drop is complete yet. The breakdown needs confirmation by trading under today's close. We gap up, this break doesn't count, as long as we maintain it. The producer price index comes out before the open tomorrow. I can't predict the response to such reports with a sufficient degree of accuracy. If the drop is to continue unabated, ideally we should gap under today's low. But if we gap up smartly and keep it, today's break could turn out to be a false break. I think it's important to recall that the move up is an impulse, non-overlapping. This so far in relative scale is an overlapping small drop. When it's over, we're going to go up again, but that doesn't mean it's over now. So we're going to have the PPI come out tomorrow. It's the pattern with the early high. Very likely we have a gap opening. If we're going to keep dropping, ideally we should gap and undercut this low. We gap up, especially gapping up over this high and over this line. This might turn out to be false. And that's today's call.